Today, stocks close out another week of gains, despite dire economic and public health news. Plus, Bitcoin rockets ever higher. But if you plan to cash out on crypto, the IRS wants to know about it. And finally, we explain a new law that could kick big Chinese companies off of U.S. stock exchanges. I'm MacKenzie Sigalos, and this is CNBC After Hours. Stocks ended Friday higher across the board, marking another week of solid gains for U.S. markets. We saw the final jobs report of 2020 this morning. The economy added about 245,000 jobs in November, according to the U.S. Labor Department. That was well below forecasts of 490,000 new jobs. The unemployment rate fell slightly to 6.7%. All in all, it was a sign that the economic recovery from COVID is slowing, and that's happening while the public health emergency gets worse and worse in the United States. All eyes remain on vaccine distribution plans as companies like Pfizer and Moderna inch closer to approval for use in the U.S. It's enough to make anyone forget about the major economic story of this time last year, the U.S. trade war with China. And yes, that is still a thing. And a new law that President Trump is reportedly about to sign brings the fight to the floor of the stock market. On President Trump's desk is a bill that could kick several Chinese companies off of U.S. stock exchanges and inflame an already strained relationship between Washington and Beijing. The Holding Foreign Companies Accountable Act would force firms to give up their listings on Wall Street if they refuse to open their books to U.S. accounting regulators. Now, while the law technically applies to companies from any country, it's mainly targeting Chinese corporations. The bipartisan co-sponsors of the legislation said their aim was to, quote, kick deceitful Chinese companies off U.S. exchanges. And to be fair, Chinese companies trading in the U.S. are no stranger to accounting scandals. Just this year, Luckin, a Chinese coffee chain that billed itself as a rival to Starbucks, was delisted from the NASDAQ after the firm fabricated $300 million in sales. Now, if the law is passed, it could affect companies like Alibaba, oil giant PetroChina, JD.com, and more than 200 other names. Chinese companies listed on U.S. exchanges have a combined market capitalization of about $2.2 trillion. So a mass delisting would mean major movements of capital, something that experts say could backfire on American investors.
If the bill becomes law, I think these companies are going to leave our exchanges, and they're going to leave on prices that are not going to make American investors better off.
And we're not just talking about big institutional names on Wall Street. This could also affect mom and pop investors, so people like you who have bought shares in Alibaba or have your retirement savings invested in ETFs that cover Chinese companies. Now, some say that Chinese authorities wouldn't actually mind if this goes through. Let's say Alibaba does get delisted. It actually speeds up something that Beijing is already trying to do: build up its own exchanges. More major Chinese companies listing at home would be welcome news, and it wouldn't be so bad for these firms either. Chinese markets are far more sophisticated today than they were 10 years ago, so companies retrenching and listing in China wouldn't be as limiting as it once was. But analysts say that a mass delisting is actually pretty unlikely.
We don't have to be too alarmed at this point. There are several reasons for that. One is that the fact that there's a 3-year grace period, there's an opportunity for a negotiated solution, even if this legislation is signed into law.
Yeki says that Chinese regulators have also indicated that they are ready to sit down to reach a mutually acceptable solution. And there are signs that the SEC is ready to negotiate. Ultimately, we are dealing with the world's two largest economies, whose financial markets are becoming more and more intertwined. Decoupling the two is both complicated and, well, not all that advantageous for either country. Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
I'm a little bit under consensus, not a lot, but a little. I really like the 6.7% unemployment rate. And I would note, by the way, if you look under the hood of this thing, the biggest declines in unemployment were minority groups. That's the toughest nut to crack, but they're really coming down.
My big issue with this deal that I hope we can fix is right now a lot of the money is with the PPP program and not enough with the unemployment insurance. The studies show that 25% of the PPP program went to the top 1% of loan borrowers. I'd rather be extending more in the unemployment insurance.
I think this shows that beauty is actually a very important category for people at any time, especially during this difficult time that we've been through, because the categories that you see really excelling are all about self-care. So skincare, people have more time at home to experiment with new rituals, and we're seeing that in our data.
Nobody's going to ban Bitcoin. Nobody's going to ban some of these transmission technologies. I think it's going to be a lot less bad than people were worried about.
We just heard about a potential crypto backlash under a Biden White House. That could slow down Bitcoin's massive run higher into 2021. The original cryptocurrency is hovering near all-time highs after an epic run in 2020, crossing into the $19,000 range in November. You can see on this chart when Bitcoin's rally really kicked into high gear, around the start of October 2020. Is anyone else getting flashbacks to 2017? That was the last time we saw this kind of price action in Bitcoin. Now, back then, there was a mad rush into crypto just before the bubble burst and Bitcoin plummeted to $3,000. So if you're getting antsy and planning on selling any Bitcoin between now and the end of the year, there are some tax implications you should be aware of. CNBC's Sharon Epperson can explain.
With Bitcoin on a tear and hitting a new record high, investors who plan to cash in need to get ready for the tax hit. If you bought or sold Bitcoin or any cryptocurrency this year, the IRS wants to know about it. If you've owned or used Bitcoin, you may owe taxes no matter how you acquired it or how you used it. The IRS now asks this right on the first page of the 1040 federal income tax form. At any time during 2020, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? Yes or no? And you'd better check the correct box on your return. Nathan Rigney from the Tax Institute at H&R Block tells me that if you know that you've engaged in a transaction, it's very important that you check the yes box, because if you don't, and you know that you've engaged in this transaction involving cryptocurrency, it could be considered tax evasion, and there can be criminal consequences. Now, that's the worst case scenario. At the very least, you could be hit with hefty penalties and interest for failure to report income. So here are a few things that you need to know about how to figure out if you should be hitting that yes box on the return. Make sure that you understand that if you've had a sale, receipt, or transfer of cryptocurrency, even if it's for free, or if you've had an exchange for goods or services or other property, then the IRS wants to know about it. You need to check the yes box in that instance. And also make sure that you have some critical information. There are a couple of things that the IRS is going to want you to report. They want to know your cost basis, the holding period, as well as the fair market value. Now, the difficulty is trying to get this information, because you're not going to get a tax form necessarily from an exchange that's going to provide all this for you. So keeping good records is really, really key. And one of the key factors that you want to consider is that holding period, because that can have a big impact on your potential tax hit. Here's how the IRS considers that holding period. If you have held on to this for longer than 1 year, then it's considered long-term capital gains, and it's subject to capital gains tax. That can be up to 20%. But if the holding period is less than 1 year, then it's considered ordinary income, and the tax hit there could be as high as 37%.
Okay, time for today's numbers round. First up is 17. Warner Brothers announced that it will put all of its 2021 movies on HBO Max the same day they release in theaters. Now, so far, that accounts for 17 major films the studios lined up for next year, including high-budget films like Wonder Woman 1984, The Suicide Squad, Dune, and the fourth Matrix film. It's the latest blow to the struggling cinema industry, which has seen other studios shorten the time that films play in theaters before they arrive on streaming platforms. Warner Media CEO Jason Kilar said in an interview with CNBC that he doesn't think this will destroy movie theaters, but cinema stocks fell dramatically on the news. Next, Zero. Elon Musk has put his California homes on the market after months of threatening to leave the state. His intended destination? Texas. Several close friends tell CNBC that he's making the move to the Lone Star State official. Now, if the move does happen, Musk stands to save a ton in taxes. The personal income tax rate in Texas is 0. Meanwhile, California's top marginal tax rate lies at 13.3%, the highest in the country. Musk, now the second richest man in the world, is among the loudest critics of California's taxes and regulations. And finally, $4 billion. Petco has filed to go public on the NASDAQ. After a year that saw a surge in pet ownership while people were stuck in quarantine, all of those new pets have created $4 billion in new demand for pet products, and pet stores are cashing in. Petco reported in its filing that while the company was losing money, sales had increased 9.6% between January and October. Petco plans to go public with the ticker WOOF next year. Don't miss a single development on these stories and everything else going on over the weekend. Check out CNBC.com and download the CNBC app. That's it for After Hours. We'll be back here in our home office every Tuesday, Thursday, and Friday, so be sure to catch us then.